things that has been on the anvil for a while. And there is been a bit of a concern over it is rate rationalization. It was once again not taken up for whatever reasons. Now, what do you see as the implications of this delay essentially in rationalizing these multiple tax structures?
Well, I think it just increases the complexity, nothing much. The problem is, and there's some interesting fact, which I was just reading, is that out of the 115 countries in the world who have implemented GST, there are only 5 countries, including India, which have 4 slabs, 4 or more slabs. So, I mean, when we talk about rate rationalization, I think what the main objective should be is to bring down the rate of the slabs of the tax rates, rather than, increasing the or decreasing the rates on every or each goods or service. That I think does not serve the purpose. What we should strive for is perhaps merging the 5 and 12% rates into something between 7 or 8%, and the 12 and 18% somewhere between 15 and 16%, so that the number of slabs comes down. That I think is the real, that will be actually the real advantage of rate rationalization, rather than having, the same product, depending upon how that product is made or consumed, you have 2 or 3 different rates. I think that will just add to the complexity. So I guess what we need to focus on, and what the council needs to focus on, is how they can bring down the number of slabs of GST.
So, Mr. Bose, I have a question. As you rightly mentioned about that one of the important exercise is to have a rate rationalization, of course, but it's not a simple task because you must be knowing that there is a state panel, looking into examining the matter, and they somewhere not so comfortable with tinkering the existing rates, because now they are saying that the GST is very much stable. So how you think that the council should come up with a consensus based approach when it comes to rate rationalization?
No, you're absolutely right, Shimi. I think, one of the fundamental aspects over here is that the states and center both have to be on board with the idea of reducing the number of slabs. It cannot happen if either of the state or the center is not in agreement with that. But having said so, I think the answer to that is not really classifying the same product under different rates depending upon the usage. For example, a couple of months back, there was a debate on buns with cream, buns without cream having a different rate. Then there was a debate about parathas in a frozen or a packaged form as compared to parathas which are consumed fresh in a restaurant. Different rates applying. And now we have the issue of popcorn, salted, caramelized, so on and so forth. So I think this definitely is not the way to go, for sure, going in the future. Otherwise, this is going to lead to the same issues that we were facing in the pre-GST regime, where there were so many classification issues coming up now and then. And, this leaves a lot of scope of interpretation, and, it leaves the assessee at the mercy of the GST officers, who sort of at times, and I'm sure Abhishek will agree with that, take bizarre interpretations about a lot of things, and which unnecessarily increases the litigation costs and, cash flow issues for the companies. So, I think if we really need to move towards a good and a simple tax, the first and foremost would be to figure out a way that these slabs are reduced, somehow merged, so that the states also get whatever they want in terms of the revenue share, and the the pressure on inflation, as Abhishek was mentioning, that is also sort of controlled.
But, as you rightly pointed out, that there should be a merger of the existing, rates, which is like 4-tier structure. So, but at the same time, we are getting sense, that the GST Council, or maybe the GUM, because the entire issue is with the state panel now. It's yet to be tabled, with on the GST Council. So they are somewhere in favor of having a special levy for sin goods, or maybe putting some luxurious item into 28% bracket, but they are not sort of very keen on touching the mass consumption item, the rates on the mass consumption item. So you think this strategy is helpful? And second question is, which is related on the compensation cess. As you know that the regime is ending, and somewhere the rate rationalization is connected with the compensation cess. Like what will happen to this cess after March 2026? So how are you seeing these developments,
So yes, I mean you're right on that aspect. Certain goods are taxed at a higher bracket of 28%. In fact, there were some discussions that if we were to reduce the GST rate on insurance, life and health insurance, then we need to increase GST rate on certain sin goods, for example, motor vehicles and aerated beverages, and tax it at a higher rate of probably 35% or so. And also, yes, as you rightly mentioned, compensation cess is coming to an end in 2026. So, that has to also be taken into account while determining as to how you want to rationalize the rates. Having said so, I think, as Mr. Shah was mentioning, there are various committees. There's the fitment committee, there's a committee which looks at the legal issues. It is really, they would have to sort of go full throttle on this exercise and see as to how, within the limited time that is available before the compensation cess is abolished, how they can sort of be more creative and ensure that the states are sort of suitably financed through the tax revenues, and at the same time the costs are kept in check so that the common man doesn't suffer. Having said so, I'm also in agreement with what Abhishek was saying, is that we need to increase the tax base. Maybe that is where the answer lies, that you increase the tax base, you try and see that how if there are certain exemptions which can be done away with and can be brought in a lower tax bracket or even a higher tax bracket with input credit, because at times giving a lower tax rate or exemption may not really reduce the cost, because there are certain input credits which get blocked. So, probably having a look at those services or goods which are not being taxed right now, which are exempted, bring it in the tax base so that you can have you can increase the revenue on that count, whereas at the same time keeping the number of slabs at the minimum possible, so that we sort of achieve the objective of having a simpler tax regime than what it is as of now.